These are interesting times for investor relations, particularly in the UK and in Europe. There's a lot of changes, perhaps impending, not necessarily happening yet, but we've been talking to the think tank today about some of the regulation around the sell side. Let me ask you about what are the unintended consequences, do you think, of regulation?
This one I think is going to be very interesting. We've all, for more than 12 months, been watching what's happening around the relationships that we have with the brokers and how much we all rely on corporate access to set up the meetings we need to have with investors. And actually I think that's settled in fairly well. It hasn't had a huge effect on the market yet. But actually the big change that could be coming down the pipeline in terms of how do you pay for sell-side research, I think can have a much bigger effect. I think a lot of us would say we feel as if we're overbroked. A lot of us feel that we've got too many analysts covering us, and within that you would always say there are better analysts and there are ones that just will do the job day to day rather than delivering huge value. So if you get to the point of paying for research, you're ultimately going to be picking the best research. I think where the challenge then becomes is you'll end up with a smaller level of coverage. Now you might say that's a good thing, but actually for the smaller companies, they're already struggling to get the right level of coverage to be able to get the story out there. So while all of the analysts and the brokers are naturally going to cover the FTSE 100, what happens if you sit outside? Where's your level of access going to come from? I think that then has the risk of a knock-on consequence to those who can afford to buy research and those who can't. So within the institutions, there's obviously appetite already, I think, among the biggest institutions to bring some of the research in-house because they can afford to have that internal capability. That's just going to make it even harder for the smaller institutions. And we're already seeing some who, not that far down the list of institutions, are already struggling to get attention themselves, are struggling to get meetings with companies because they're struggling to get the corporate access because they get prioritized by the banks or deprioritized by the banks. So you could ultimately see a place where actually there's a flight to the top end in all of the major areas amongst the sell-side research and the brokers, amongst the institutions and even amongst the corporates, which then ultimately means if, as a corporate, what you could be facing is a much greater volume of activity having to be done internally. So on that basis, you're facing bigger teams, bigger costs. That's something, again, the bigger companies can bear, the smaller ones are going to struggle with a lot more. So are you as a smaller company then going to really struggle to get in to see the institutions you need to see to get the right level of support for the business?
You're seeing very far out, ultimately harder for small and mid-cap companies, possibly higher cost of capital, difficult to get attention, difficult to get the attention of the investment banks. So institutional investors probably consolidating, flight to larger ones, as you say, harder for smaller investment banks to make a go of it, and harder for smaller and mid-cap companies. So, as you say, some not planned for consequences, and harder for smaller companies.
I think that's the real risk. I think what naturally happens in markets, though, is you will find other alternatives coming through. I mean, we're already seeing some digital platforms as alternative routes to reach out to investors. So it will be interesting to see whether technology becomes more of an answer for some of us.
Do you think corporates are having their say in this development, in this debate? Certainly the buy side and the sell side are up there with the regulators. Are corporations being heard?
I think, from my perspective, the IR Society does a very good job of representing us as IROs. They're very proactive on the regulatory front, and it's incumbent on all of us as IROs to engage with them as much as possible to make sure these sorts of concerns are being heard.
And of course, with your buy-side investors and sell-side analysts, I would imagine it's a popular topic of conversation when you're out on roadshows or when you're with corporate access people and analysts and so on, right?
Increasingly so, only not just at that level yet. I think we almost need to see this bite, and then we start to see, particularly on the sell side, when we start to see some of the analysts finding it much more challenged in terms of their model, and a lot more rigor around who delivers real value in terms of their analysis.